Hello friends, welcome to Learn It in 10, where we tackle big topics in small bites, just 10 minutes. That's it. Okay? So no fluff, no fancy talks, just straight up learning. Right? So let's dive in before the clock runs out. Okay? So like always, today before we proceed, let's not forget our ultimate investment mantra, which is know your exit before you enter, which is what KyebyeWay stands for. Okay? All right, let's proceed further. So friends, in our previous module, we saw what moves the price, right? So it's the demand and supply, right? So if you have not seen that video, I'll put the description, I'll put the link of the video in the description. I request you to kindly watch the video first and then this one, okay? So what moves the price? It's either demand or the supply. And in our previous module, we saw how demand impacts the price. This time, we're going to watch how price is affected by supply. Okay, come, let's proceed. So we saw this image last time also. So kindly remember, whenever I'm talking about demand or supply, I'm referring to price. Okay, so this is very, very, very important. Okay, excellent. So the general definition for supply as per economics, the subject economics is supply refers to the total amount of product or service that is available to consumers at various price levels over a given period, right? So in economics, especially when we're talking about, let's say, a product or a goods company, a services company, supply is all about physical goods or services offered by producers, the people who manufacture, okay? In investing, supply pertains to financial assets like your stocks or your gold or your bonds or your real estate. It could be any kind of an asset class, okay? And it's mainly driven by investor behavior and market conditions. So there's a fine line between the supply that we see in economics and investing, though it's almost the same. There's just a small fine line, okay? So now in both cases, supply interacts with demand to influence price. And in economics, higher supply with lower demand, uh, lower prices of goods and services, okay? And in investing, more shares for sale, that is supply, than buyers, which is also known as demand, reduces the stock price. Don't worry, I've got a beautiful example for you coming ahead. Once you see that, everything will be very clear for you. Okay, come, let's see that. So friends, as I mentioned in the previous slide, I've got this beautiful example for you, which I've tried my best to simplify it, to help you understand the concept of supply. Okay, so let's assume a group of investors. Who's called an investor? A person who's also a shareholder, right? A person who's invested his money in could be a company or any other entity, right? So they're called as investors or shareholders. So in India, how it works is every 3 months, once in every quarter, the companies which are listed in the share market are expected to publish their quarterly results, which is nothing but a testimony of how they performed in the last 3 months, right? So based on that, these group of, we're just talking about an example here, okay? So let's say there is a company called JJ Public Limited. This is just a hypothetical example, right? So these group of investors, after analyzing the quarterly report, they come to the conclusion that the company is not going to be announcing a very good set of numbers or a very good set of results. So what they do, they decide to sell the shares, all right? And on the other side, there are buyers, because you need both a seller and a buyer to complete the transaction, right? But look at this, the number of buyers on the other side is relatively smaller compared to the number of sellers. So eventually what happens when there is more sellers than buyers? There is excess supply which pushes the stock price down. Okay, so please remember, whenever there is more sellers and less buyers, obviously the supply is going to be excess and it will result in stock price falling, right? And the same way, the other way around, let us just look at the other example. The same public limited company, JJ, let's say after the previous disastrous quarter, the next quarter or maybe a couple of few more quarters, they perform really well, and there are very few sellers who are willing to sell the shares without knowing how to read the financial what do you call the report. And then what they do, they decide to sell. But on the other hand, these group of this set of investors who were initially the sellers turn into buyers. So here, if you notice, there are more buyers than sellers, right? So what happens here? Obviously, the supply is low. Supply in the sense we are referring to the sellers. So always remember, sellers are suppliers and buyers are demand creators. Okay, so when this happens, obviously the stock price goes up. Understood? This concept are extremely important because in future we're going to be learning about volume analysis and a lot of other stuff. So kindly, if you don't understand, please rewind this video, pause it, understand it, and then proceed further. Okay? Excellent. Let's see what happens next. To summarize, supply works hand in hand with demand, right? So, I mean, this is obviously to determine the stock prices. In a sense, the concept of supply helps investors grasp how the availability of stocks can influence market behavior and pricing. Understood? It's self-explanatory, correct? So please remember these three things. When supply is equal to demand, when there are equal number of sellers and equal number of buyers, let's say 10 is to 10 or 10 is to 11, which is almost equal, the price is going to be balanced. Price will remain stable. You will not see any kind of volatility. All right. Next, when supply is lesser than demand, obviously the price rises. When there are less sellers compared to the buyers, obviously the price is going to go up, right? So the third one is when the supply is greater than demand, which means when there are more sellers as compared to the buyers, the price will fall, right? Because more shares are available than buyers want, causing sellers to lower prices to attract buyers. Understood? Excellent. Please, if you don't understand, kindly type your question in the comment box. I'll try my best to reply as quickly as possible. All right? Excellent. Let's see what happens next. So in our market, we see a couple of words, right, which all means the same. So please don't get disturbed or don't get confused. It all means the same, which is or which are supply, selling, downtrend, short, or bearish, right? In simple words, all these mean they're expecting the price to go down. Some might say Indian market is bearish, or they'll say I'm short in let's say Bank Nifty or Nifty, or I'm short in Indian markets or any particular stock. They might say the Indian market is on a downtrend, or I am going to be selling this particular stock, or there's excess demand, which all simply means they are expecting the price to go down, right? So next time you hear any one of these words, it simply means the price, they are expecting the price to go down. All right? Excellent. So with that, friends, we've come to the end of today's module. So if you have any questions, I kindly request you to type your questions in the comment box below, and I will gladly reply as quickly as possible. Okay? Friends, before I let you go, let me quickly share the topic for our next module, which is what is stock market and a brief history in English. Okay, so as you all know, this channel we do videos on in three languages. One is English, Kannada, and Tamil. Right, so we are going to be coming up with what is stock market and a brief history in our next module. Right. So kindly hit that like button, the subscribe button, and the bell icon and support this channel. And by you doing this, It's going to reach as many people as possible who would like to learn about finance. So kindly do this favor for me. And that's it, folks. Thank you so much for your time. Have a great day and God bless. Jai Hind.